last like 3-4 years, I've been really unaffected by index moves, the dips in the market, periods, weaker periods for my own holdings. So I thought that, okay, now I'm immune to this. I can just focus on fundamentals. I can do this now. And then we started 2020, and we got back to those days that I experienced in 2008, because I was active then as well. Then I was super. I had a small portfolio that I could move pretty quickly. So then I was quick out. So I was only down 13% or so 2008, just because I sold everything really early and stayed out. So that was good. I cannot do that now, and that's not in line with my strategy now. So I saw a really big decline in my portfolio, and I was affected. I was not Superman. So what I did there was that I didn't do anything stupid in terms of trying to sell a lot of holdings or do a lot of stuff. I think I bought into one new case that's been really good, and I divested one case that was okay. So that's what I did, but I did keep a diary just to try to understand the psychology of those days, and was stuff like, okay, will this be Armageddon someday? To, okay, now I feel a little bit more optimistic. Will this stay? And then the next day, no, I'm not optimistic anymore. So yeah, I surely got affected a lot. Luckily, I didn't act on it, but for my head, it was tough.
Did that experience make you want to track your thoughts even more in the coming years, or was it just an experiment that you learned something from and now you can move on?
It was more of an experiment, because I was a little bit cocky and I thought that I was past those days. And there I am also lucky that I have my co-founder Måns. He is Superman in that sense. It's crazy when things is blowing. I just asking him, okay, am I overreacting here? And he can be down 13% in his portfolio one day, and he will still look at it with a really like sensible eyes. So yeah, he's a big rock those days, and maybe I can help him with some new angles and cases and stuff where I go maybe a little bit deeper than him. Yeah.
Sounds like the perfect partnership. Just the last principle on your investment journey. If you talk about a concept like simplicity, bring that up, because when you work with data all the time. You can have information about everything, but it seems like to really understand your investment strategy and how you structure things, you kind of try to make it as simple as possible and try to focus on the features that is. Maybe the Pareto principle is a good one, that the 20% that gives 80% of the result, at least have that framework in mind. How important has it been to have like a simple but solid foundation to work from when you're investing?
I don't think I have a really applicable model that I can use on every investment. The only thing that I come back to is that when I've decided to enter or go into a new position, I'm starting to acquire shares, and it's going to be a significant holding. So for me, everything from 35% down to 10% of the portfolio makes sense for me. So then I always do one sheet. I'm not a pro in Excel, so I do it like in Google Sheets, and I just do 2-3 years back, 2-3 years into the future, and I do a really simple model. That's a little bit different depending on the type of company, but normally it's like top line growth, profitability. I do always like gross margin, of course, and OPEX in terms of sales, so you can see the effectiveness of the company. And I always decide on my view of the peak margin. I think that's one of the best advice I can get that's really easy to try to understand. Okay, what's the peak margin of this company? And the peak margin would be the profitability level that this company will have when they're in blue sky steady state, so to say. And those type of really qualitative, high growth companies, you need to value from a peak margin perspective at every point in time. So I don't really care if they're doing 12% or 17% next year. I just care what they're doing from my peak margin perspective, because that's how I value them. I see them as being able to have that peak margin at the end of my case period, the end of my holding period, and hopefully the market will even over evaluate that margin at that point in time. So that's what I always do. And then gathering information and finding like the bricks of information that I need, that varies between company to company. It depends what I think is hard and what I can't understand. That's where I dig deeper.
Very, very good advice. Let's go over to the entrepreneurial part of your life.
Yeah.
I mean, obviously you talked about it a bit, but maybe just to repeat a bit, the first experience in entrepreneurship, because I guess that was like super critical in terms of you wanting to continue to create companies. So maybe just like go back and just briefly talk about that experience and also how you wanted to scale it.
Yeah. So the basis in the entrepreneurial experience was actually, so it's good that we started with the investment approach, because that's where it came from. So I got really into investing in the last years of my education. So I really decided not to study economics after that, because my father done it, my big brother done it. I wanted to do something unique. But then I felt, okay, so this investing thing is going to be a big part of my life. So I need to understand the basic accounting and also like management models and pricing models and stuff like that. So I started to study at Handelshögskolan here in Stockholm. But there I decided I didn't want to, I wanted to pass the exams, but not much more than that, and then put in my time by working. So I did some extra work for Börsveckan with Peter Benson in the beginning, and then pretty early on, me and Måns started a company called Introduce that is today owned by ABG, Sundal Collier. And that was a platform for introducing micro and non-cap companies to both institutional investors and private investors. So we did that in the middle of the financial crisis in 2008. So that was really, really a good way of starting to understand how to start a business, because it was not about A rounds and B rounds and big investors, but we had like 30,000 kroners to build the product, and we went from there. So that's where we started, and everything came from the interest of financial data and financial analysis, I would say.